Good morning from Los Angeles and happy Tuesday. It's Alissa, Coram, and Ed Carson here with your market update. And on today's show, we're going to be talking about Walmart, Ciena, and Wix. But first, let's check in on those major indexes. We are narrowly mixed. The NASDAQ leading the gains on the upside, up a little over 0.1%. The S&P 500 slightly in the green after starting the day in the red, and the Dow is slightly in the red. And we're going to be taking a look at the NASDAQ. So how are we doing? How's the uptrend doing?
Oh, it's doing great. The NASDAQ is up for 8 straight weeks, and I mean, really, we've had resistance for a couple of days, but it's been pretty, it's like getting junior varsity resistance. I mean, we cleared the 200-day line. We're right around the December 3rd peak. If you look over there, that's when things really started to get bad at the end of the year. So things are going pretty well, and more stocks are breaking out. It's a pretty strong market right now. Yeah,
a great environment to be looking at stocks to buy. We have Walmart shares rising today on the quarterly earnings report, currently up about 4% in heavy volume, coming after a breakout from a cup with handle base. It's extending those gains today, still in buy range, and strong e-commerce sales from Walmart on the quarterly report. E-commerce sales in the quarter up 43%. Earnings growth up 6%, sales up 2%. But all in all, investors liking the quarterly report from Walmart.
Yeah, absolutely. After last week's retail sales report, which was so grim, I mean, now to have Walmart have strong same-store sales, strong online sales. Yeah, I mean, Walmart broke out on Friday. The volume was a little light, so there was like, and especially ahead of earnings. But stock, as you say, is still in buy range. Right at the edge of that, you can sort of see that blue range is the buy range on this, and it's not. It may be at the edge there, but it's just an impressive performance there.
All right, and now taking a look at Ciena, which has been a name on our leaderboard, breaking out of an ascending base here. The stock up almost 5%, heavy volume, that relative strength line hitting a high, which is always good to see. So this fiber optic stock, at least, looks like it is looking very strong. Yeah, I mean, it came out of a rare ascending base. We talked about it a little bit last week. 3 pullbacks, each one higher highs, higher lows. Nice action. I mean, really, the fiber optic group has been coming back, and there's a lot of stocks that are in buy range or close to it. Ciena has a couple of quarters of accelerating earnings and sales growth. You see that with a lot of the other stocks. Right. I mean, the whole group is picking up. So a lot of reasons to like this. It's been on leaderboard for a few months, and really at a relative strength line. It just powered on. Stock did well during the correction. Really a lot of great things about it. That's right. And if you're new to this show, that relative strength line measures price performance versus the S&P 500. So we look at that as a technical indicator, especially when stocks are breaking out, confirming that move.
You really want to see if they're a leader or a laggard, and this has definitely been a leader.
All right. Well, Wix has a strong relative strength line as it breaks out ahead of its quarterly earnings report. Another name out of the computer software enterprise industry group. We've seen a lot of strong names out of this pocket in the market.
Yeah, I mean, software is the strongest sector. I mean, this is one of the strongest groups too. I mean, that's just where the market has been. I mean, obviously there's other areas like Ciena and Walmart, but software's been where it's at. Wix is breaking out. It was teasing that a little ways. I mean, obviously you have to be really cautious ahead of earnings. Right. I mean, yeah, Walmart moved nicely, but it could have gone badly too. Also, Wix has been moving, just up and up and up. You could argue there's been no shakeout pretty much from the bottom there. So, there's the risk. There seems to be an added risk of a pullback, either now or soon after this. So that's just something to keep in mind. But it's doing really well today. It is a breakout. It is in buy zone.
Right. And you mentioned the risk that comes with buying stocks ahead of earnings, which is why it's so great to keep in mind the several earnings strategies that we like to talk about here. One of which would be the option strategy. So buying a weekly call option, you're capping your downside risk, and then also looking at those gap ups, which I know our markets Smith's team is especially fond of, but these guys over here too.
Yeah, I mean, that's another way to play it. It's like, yeah, because if it's a big, powerful earnings gap, and oh, it's way extended, no, that can actually be a buying opportunity. Again, you're not looking for the lowest price. You're looking for the best price. You're looking for the price that when the stock is most likely to be moving higher.
Right, and we've seen a lot of momentum on those earnings gap up, so definitely something to keep in mind with a couple more reports ahead. Thank you so much for joining us today, everyone, and make sure you check us out all across social media. We are on Facebook, YouTube, Instagram, and Twitter, so make sure you are following and subscribing for all the latest. And you can tune back here right at the close. We'll be back with our end-of-day analysis on our Stock Market Today show, so don't miss it. And in the meantime, be sure you're heading to investors.com for all the latest stock news and analysis. Thanks for watching.